Welcome to another episode of the CPG Guys podcast. Our co-hosts, Sri Rajagopalan and Peter V.S. Bond, explore how brands and retailers engage with consumers online, in-store, and everywhere in between. And now, here are Sri and Peter. Hi, everyone, and welcome to another episode of the CPG Guys podcast. I'm your co-host, Peter V.S. Bond. As always, I'm joined by my co-host. He is an e-commerce veteran of numerous major CPG manufacturers. He's an entrepreneur. Please join me in welcoming Sri. Sri, how you doing today?
I'm doing awesome, Peter. A pleasure to do this with you, as always. Thank you for being an awesome co-host and partner in this journey.
Before we get to our guest, I want to remind our audience that if you are interested in finding any of our content, you can find them all by just going to cpgguys.com. So let's get to the heart of our interview today. So I met today's guest last year down in Austin, Austin, Texas, at a food and beverage digital conference. We were sitting on a symposium panel together, and I found him to be very engaging. We had dinner, we chatted all night, and I found him to be an incredibly great storyteller, and the story about the business that he's launched is quite compelling, and I asked Jim to join us today. So please join me in welcoming today's guest, the founder of JiMMYBAR, which is a nutritional bar business, which he started with his sister, Jim Simon. Jim, how you doing today?
Thank you. I have to preface this with, depending on the age of your audience listening, there are probably at least 6 or 7% of people who understood your mantle, your reference.
We're totally okay with that. We love the more obscure, the better. We're good about that. As long as we're happy, we're good.
Yeah, people go back. I think Derek Jeter's old. Yeah.
Yeah, exactly. So thank you. Jim, before we get into the questions, can you tell us just a little bit about you and the business that you're currently operating? Because it's a really fantastic business.
Yeah. Well, first of all, thanks for having me on.
Yep.
It's been great. Big fan of yours. Going back to the Austin, you forgot we did have a few drinks. It wasn't just eating.
There might have been some cocktails.
There might have been some cocktails. Fun party. And a great business you built. So I started the company in 2014. Had no business experience in CPG, but this is my sixth startup that I've ran or started up or been a part of, and just saw a white space because walking through Whole Foods and looking at a lot of the products, even like Jewel and some of your more mainstream grocery stores, even stuff that was supposed to be healthy wasn't healthy. And so I started eating bars because I was living in New York and flying back and forth to Silicon Valley because I was working for tech companies, and I would just eat bars because it's quick. It's a quick food, and you think it's healthy, but it's not. And I started, reading the labels of the bars I'm reading and having to Google what the ingredients were, and you shouldn't have to Google your ingredients. So pitched to my sister, who was a chef and a restaurateur, owned a well-known restaurant in Chicago for 25 years called Filippo's, and she's a chef. Her husband's a chef right off the boat from Naples, Italy. And I said, let's make something healthy, chips or bars or something, and be completely transparent and make it kind of fun, because for whatever reason, if you extract like the cereals of the world, food takes itself kind of seriously, especially natural foods take itself very seriously. So we came up with decided on bars. She as a chef, of course, wanted to add, brown sugar and butter and all that kind of stuff. I'm like, no, it's got to be healthy. It's got to be a limited amount of ingredients, and so I was doing biz dev and M&A for a tech company, and then we sent out an email to our friends and family, said, what should we call this thing? And my niece said, call it the Uncle Dummy Bar, because that's what she calls me. And I'm like, well, that's kind of funny, I don't know if I want to be known as Uncle Dummy. And so she said, call it the JiMMYBAR, and we did a lot of iterations. So we kept it there, even though I don't like the name Jimmy, but it sounds all American, like a golden retriever. So that's how it was born. Fresh, healthy, tastes good, fun, approachable, not another bar that's made for meatheads in the gym. And we launched it for fun. Not having a CPG background, I didn't know what slotting was. I didn't know how many middlemen there were in food. I didn't know all the fees that exist. And when you send an invoice to your distributor for 10 grand, you get $1,800 back. And I didn't know what a chargeback was. So I had to learn all this stuff. And, first, second, third month in here, I mean, because you're a tech guy, and that is when you want to do a deal with Google, you call Google. There are no middlemen. And so I had to learn how that whole thing works. And I said, F it, I'm just going to sell to food service. So my go-to-market strategy from year 0 to 4 was selling to corporate pantry, Google, Facebook, Uber, Intel, Cisco, all those guys, Fireman's Fund Insurance. And that's what I did. And so I built a nice little business that was profitable, just selling onesie twosies directly to the corporate pantry. Then we got into college, and then we got into retail. So we take a kind of an atypical approach, just because I frankly didn't know what I was doing. And I thought, well, companies should be profitable. I didn't know how CPG works. So I resisted going the VC route, only because I wanted to keep the company nice and small and tight and family. So we've raised some money, but all friends and family, not morally opposed to going the route of family office or VC. But for the first several years, we just wanted to keep this thing lean. And that's what we did.
So let's start off by asking you about the product itself, Jim. You can market it all you want, but if it doesn't taste great, it's not going to resonate with consumers. They might try it, but they won't come back. So how did you hit upon the recipes right off the bat, or was it trial and error? I've got to assume it's a little bit more the latter, that ultimately led you to the products that you went to market with.
So the original bar, going back to 2014, 15, 16, 17 and a half, was a date-based bar. It was like a crunchy Lara bar. It tasted really good. And we did pretty well with that, but we didn't get the market acceptance we wanted. Right around when this happened, the high protein, low sugar movement was happening, the Quest bar and One bar, et cetera. And so my sister and I said, that's kind of a little more interesting to me. I personally love dates, but not everybody loves dates. And so we wanted to get into high protein, low sugar, but we wanted it to taste better than the products that are out there. So we pivoted there. It was a big pivot. From there, we started getting into which is an area I always sort of liked, because that is the way people shop now. They pick up 2018, and we started getting to functional. And I know the other gentleman on the call here is big into functional. Functional is where it's at. And so what we did was every bar that we made has to have functional ingredients, whether it be plant-based caffeine, guarana seed, or MCT oil, or collagen, or immune bar that we launched yesterday. Everything has to have a function above and beyond nutrition, and it's got to taste good.
So you got flavors like Get Jimmy With It, which is your variety pack, Wake and Focus, Citrus Burst, Keto Macadamia Nut. Yes, I said Keto Macadamia Nut, and Eye of the Tiger. So you got over 10 SKUs going on over here, and the recipes are not the same. Did these things just come to you? Were you going down the route of imitation is the best form of flattery? How did you guys evolve from, look, we see white space, to we know Eye of the Tiger, the caramel chocolate nut product is the right one for us to be introducing to the consumer?
So to answer your question, it's always taste forward. It's again, my partner's a chef, right? So she thinks chocolate peanut butter is boring. I think it's great because it's easy and it's profitable and people like it. So it's been this like kind of this push-pull conflict a little bit, where she is a chef. So she's, a little bit of this, a little bit of that. And she likes sweet and savory. And I keep telling her, there's a reason why there's not a chili pepper, oregano bar out there. I don't think that people want it. Doesn't mean I'm right, by the way. I could be completely wrong. But in general, chocolate peanut butter works, and so on and so forth. So it's me being a sales guy and her being a chef, bumping heads in and agreeing on something. So the way we create products is I will go to Walmart and Costco in meetings, right? So, and the first question I ask any buyer in a meeting is, what's selling? What's hot right now? And they'll say, oh, Quest bars are great, or Skinny Pop's great, or whatever. I'll say, okay, why do you think that is? I ask a lot of questions, almost like a detective. Then the last question I ask in every meeting is, what innovation are you looking for that you just can't find? And everybody kept coming back to me saying, high protein, low sugar, anything. Like, get me a high protein, low sugar, glove and I'll eat it. Like, anybody's looking for high protein, low sugar. So then I'll ask about flavor profiles. And it's very interesting, the answers you get. What I was getting last year was keto, right? So the buyer from Costco and the buyer from Walmart said, get me a freaking keto bar right away. So I come back to my sister and say, we need a keto bar. She does all the R&D. To make a keto bar taste good, I don't know if you guys have had keto bars. It's like, eating a dirt sandwich. So she's like, we have to use macadamia nuts. Well, macadamia nuts are 10 times the cost of peanuts. So me being, the cheap one, I'm like, nah, why don't we use something else? But we agreed on macadamia nuts. You have to use some oil in there. And it took about probably 30, 40 iterations and a lot of pain. But we have, I think, the best tasting keto bar out there. And so that's how it happens. It starts with the buyers. The buyers are listening to the consumers. My style of selling is I ask a ton of questions. I'll date myself here, like Columbo. Remember Columbo, TV show? And he's always asking questions. And all my salespeople, I always ask, just you're interviewing them. Listen, don't talk about yourself. Ask them what they want. And so that's how we iterated. The Eye of the Tiger bar is a friendship I have with Jim Peterick, who's with the band Survivor. And Ides of March, he's a rock star. He wrote the song Eye of the Tiger for Sylvester Stallone for one of the Rocky movies, and he still owns the right to it for all food items. And he came to us and he said, hey man, I love your bars. Came in with his wife and his guitar and his purple hair. And he's like, hey man, I love your bars. I'd like to give you the name Eye of the Tiger, but I want it to be this. I want it to have caffeine and turmeric for recovery because he's a workout guy. So that's how we created that. But all the flavors, we start with the base of how much protein, how much sugar, and what functionality, what problem we're trying to solve. Like the Wake and Focus was, you crash at 3 p.m. And so I said, I want to, how every kid in America is on Adderall. I know that's, politically incorrect, but they are. And so I said, let's do it like a healthy Adderall bar, so like, just with plant-based caffeine, it's healthy, it's good for you. MCT oil for brain health, throw in a couple other goodies in there, but it's got to taste freaking amazing. That's the Wake and Focus bar.
I was just going to say, as you're telling the story, you made mention of the fact you wanted everything to have some kind of functional basis. Were there any other non-negotiables that you had as you thought about formulating all these products?
Like, what do you mean? Like it's
well, I mean, I don't want there to be. I don't want it to include these ingredients. It must do this. It must do. Were there anything?
No, high sugar is a great example.
Anything that you were doing that you said, I won't do it unless it meets this criteria.
High protein, low sugar.
Okay.
It's got to be high protein. It's got to be low sugar. It's got to be under 10 grams of sugar. Most of our bars are under 5 grams of sugar. Wow. Those are our must-haves. And it's hard. It's hard to make it taste good, right? But when I send you guys our Wake and Focus bar, you'll flip. Now, the Immune bar that just came out, I think it has 6 grams of sugar, but it's got, mango, Osceola cherry, and orange. But we still made it really, really low in sugar, pretty high in protein. Value prop on that one is it's loaded with vitamin C. It's 300% of your daily amount of vitamin C. It's an obscene amount of vitamin C. Good, high protein, low sugar, functional ingredients.
You referred to, not coming from the CPG industry and still working with the store business model. There were several hurdles that you had to kind of encounter in terms of just trying to learn this business model, such as the word chargebacks, which is still a dirty term even today because there's a bunch of stuff clubbed into it, et cetera. And that when you actually get a PO, the real, for $10,000, the real payment you get is $1,800. So I'd love to know what were like some of those return on investment obstacles, hurdles that you actually had to face trying to get your products listed in physical stores. And then based on what you learned, all these amazing learnings of what is a chargeback and how the POs aren't exactly what they look like or what you anticipate, et cetera. How did you actually go about your go-to-market strategy to determining I want to sell here, this channel versus that channel? And particularly if I think about it, a bar is like tailor-made for food service as well, for during lunch breaks, all day long kind of consumption, things of that nature. So how'd you go about this, knowing that there was a lot to be learned in CPG?
Yeah, I mean, it kind of goes back to what I said about 0, 1 through 4, or year 1 through 4. Our go-to-market was food service. That's it. I could care less about how many doors we're in. I just wanted revenue, and I wanted the company to be profitable, and I wanted to keep learning. It just didn't make sense to me going into a 100-store grocery chain and paying $20,000 in slotting. Me with a calculator can figure out real quick, I'm not going to make any money. And then also, some salespeople I had in the past would say, oh, but you got to be in this grocery chain. It means a lot. It'll get us another chance. And I said, I don't care. That doesn't make sense to me, because I didn't go out and raise $20 million. Now, if I raised $20 million, then it would make sense. There's nothing wrong with that strategy. You can get really big by going that strategy. It just wasn't for me. And maybe it was dumb. Maybe I should have gone that route. I didn't go that route. So, year 1 through 4, college, mostly pantry service, like the Googles and the Facebook. I love that business. It's not as clean as it used to be, but it's still pretty decent. I love college. College is a fantastic channel. Hotels are a good channel. You're not going to get big POs. It's a lot of $200 here, $200 there. But for me, learning, it felt right. I was using my own cash. So it was a little bit different than a lot of entrepreneurs. I was writing my own checks. So I didn't want to lose $100,000 a month. I wanted to figure it out. And then when the time was right, I feel so comfortable now with our SKUs that now we're going a little bit bigger. Now we're getting into Costco. We did a stint in Walmart. We still have stayed away from grocery, which we're about to change. So grocery being probably the most expensive of all the channels, as everybody knows. For us, we couldn't make money. Selling bars at $2 per, or $3 per, you got to sell a hell of a lot to make up for the slotting. Now we're looking at it. Because we have a product offering that the chains are actually, they want. Before I had a date-based bar, and there's 8,000 date-based bars, right? Now, we're the leaders in functional bars. We come out with more innovation with the immunity bar, because we have our partner co-packer that's owned by my sister. We can innovate so fast. That immune bar, it tastes so good, and it took us maybe 90 days, soup to nuts, wrappers, box, idea, iterations, 90 days. And one of my guys who works for us, he's like, if that was, Mars or Kellogg's or whoever, he's like, that's 2 years. But we came up with an immunity bar in 90 days. So we want to run this like a tech company, like a software company, and have version 1.0, version 2.0. We joke that we're like version 4.0 right now as a company, and stay very lean and mean, and pick where we want to be. We don't have to jump. Like sometimes the best deal you do is not doing a deal. If you're going to have to pay $100,000 slotting, and you're going to go through a distributor who's going to nickel and dime you to death, and then you're going to have to hire someone to fight the chargebacks, who needs that? There are plenty of ways to make a living.
Folks, you heard it here on the CPG guys. Sometimes the best deal is the deal you don't make. Well said.
It's true. And Amazon's changed a lot. Like, let's face it. I mean, as you're launching your business right now, you have a choice. Do you go out and do you pay, X amount to get a store, or do you sell it on Amazon Seller Central?
I'll also say, I love how you describe it as version 1.0, 2.0.
Yeah.
Shri and I, our podcast, we're in version 3.2, I think. We started on YouTube, then we launched the audio podcast, then we changed the name of our podcast. So I think we're in 3.2 somewhere. But
and
thank
that's
you.
Important. You can't, I've never been an entrepreneur that spends a hell of a lot of time in front of spreadsheets, with my 2-year, 3-year, 4-year, 5-year plan, because it changes, as it should change. Yeah. And so, you have to be flexible. And every young food entrepreneur I talk to, because with the co-packing side of the business, which is a separate business, we now, Nettie, my sister, now manufactures bars for young entrepreneurs. And I always tell them, I said, be very smart where you spend your money, just be very smart. If you've got an in at Whole Foods or Sprouts, and go for it. But just know that there are costs They're going to creep up with any retailer that you didn't expect. Marketing, when it's 2 for 1, you're paying for that. They're not giving it away. They're not making less money.
So Jim, as you're building out your physical retail footprint and your physical food service footprint, you decide to go omnichannel. So walk us through how you decided to build your own brand site and then obviously getting on to Amazon. Would love to understand, are you 1P? Are you 3P? Are you a combination? How did you go about bringing your brand into the digital world?
I have to say, for a quote unquote tech guy, I'm embarrassed at how crappy I've been with our website. It should have been, again, Sri, as you're thinking about your business right now, you can go straight directly to consumer if you wanted to. There's a big appetite for that right now. For us, I should have done a much better job at Amazon in 2014, 15, 16, 17, but I was out hustling, trying to get into every corporate pantry and every college. I know we love college. And then 2018, we started getting serious about Amazon. So now we're on FB, we're on Seller Central, we're in Canada on Amazon, we're going to Australia at Amazon, and it's a meaningful part of our business. So Amazon right now, or I'll say online in general, is 25% of our business. I'd like it to be 50% of our business. You got to spend your way on Amazon too. There's not slotting fees and stuff, but you got to advertise. Unless you have a brand that's just catching fire and going crazy, you got to spend. And so people have to know that too. CPG growth is a cash pig. If you want to grow, you got to spend money. For every, I know the cauliflower pizza company, they just killed it. But they came out with a product that was totally unique. The world's never seen anything like it. That's hard to do, right? In our bar space, we like to think that we're the innovators in functional, right? No one's really done functionals as a platform or immune, but we got to spend money and we got to let people know about it. So online is a great way to do it. We've got ambassadors. We've got a couple hundred ambassadors that we do not pay. We send free JiMMYBAR's to, and they talk about it and give it to their friends, and that's helpful. How do you track success on that? Great question. I wish I knew. I don't know, but we like it, right? Amazon's been terrific. Our website is probably doing 25% of what Amazon does every month, but we get that first party data, which we like, and then you can retarget those people. Retargeting is a big part of what we do. We do DSP on Amazon. We don't do much on YouTube, and we don't do a lot of video, which I'm about to change. We're going to start doing a lot on video.
So truth be told, 24 years in CPG, I've actually had the privilege of leading e-commerce for Frito-Lay, Johnson & Johnson, Revlon, some of the largest multi-billion-dollar global brands, and I've 15 years brick and mortar prior to last 10 years exclusively e-com. So when we decided to start ZenFuel, there wasn't even a question in my mind. D2C would be right off the bat, and within a month, we'd be Amazon 3P. But when you mix those up, you've got the scale from Amazon, and of course, winning on Amazon, you got to know the tips and tricks and tools, and you got to leverage AMG more AMS than anything else. Deep believer in content, words like search, content, assortment, user experience, ratings and reviews. So it's like a surround sound system for ZenFuel. But I'd love to jump into JiMMYBAR and Amazon. So clearly, Amazon is one of those ecosystems, especially in 2020. It's turned out to be something 10x what anybody thought across the board, because shopping is largely these days browsed online with the funnel then concentrating down to actually close on Amazon. What are your tips, tricks, techniques, anything you could pass on to our audience to think about when it comes to Amazon? And then I do want to hit up the fun word we've been tossing around called chargebacks, because one of the things you do have on Amazon is chargebacks. And the chargebacks are not the same as brick and mortar, and they can be awfully complex and difficult to decompose. So what can you share for our audience about the whole ecosystem of Amazon and how you're winning there?
So Amazon's interesting. And I would tell any entrepreneur right now, it's a language almost. It's like learning Italian. You're not going to figure it out right away. So you get a broker, and that's what we did. So I had a VP of e-commerce that was trying to figure out Amazon for 2 years. It's a different language. I mean, I'm tech savvy. He was tech savvy. My partner's tech savvy. We're all tech savvy people. We get it, but it's a different language. So we brought in a broker that kind of got us up to here, and then we brought on another broker that's helping us get there. Now we're doing the DSP, which is retargeting, and that's helpful too. But yeah, you do have chargebacks on Amazon, and you're gonna spend on Amazon. I mean, sometimes I spend more than I make on Amazon. It's not always profitable, and you have to do that depending on how competitive your category is. But here's what's cool about Amazon is that if I want to go into Australia or Canada or the EU, 3 places, I'm in Costco, Australia right now, and we're doing quite well. So we're thinking, well, then we should be, if we're doing well and the people like our bars at Costco, they will like ordering it through Amazon Australia. And you can do it quick. I mean, that's like a 30-day kind of thing. Can you imagine trying to get into retailers in Australia in 30 days? Ain't going to happen. So it's a game changer for smaller brands. Same with the EU. You know, we're getting courted right now from a lot of Amazon brokers in the EU who can help us get in the EU. Very interesting. Can you imagine trying to get into the, I want to, I mean, we're in like TJ Maxx, Poland and Germany and Austria and stuff like that, which is awesome business. But can you imagine trying to get in the grocery stores in Poland and Austria? Not going to happen. So Amazon level sets everything. It changes everything, but you got to know what you're doing. And I'm not going to tell you I do, because that's why I hire a broker. And I have a really good brokerage company that all they do is Amazon, and it's still hard, And one thing I'll tell any entrepreneur is you're going to have to spend. But the cool thing about Amazon is if you're getting your butt kicked 1 month, you can lower your spend. I mean, you can turn it off and turn it on, and you can control. You have more control with Amazon than you do with traditional retail, for sure. But it's not like this magic thing that happens.
Since we're connected on LinkedIn, I see you in my feed practically every week announcing another retail deployment. Military commissaries, travel centers, GetGo, GTM, Rite Aid, CVS, Costco. The list goes on and on. You made mention of the fact that you really didn't go that route when you broke out of the box because of all those ROI obstacles. What changed that made it so that you could go after those? Was it purely scale? And what is going to enable you to succeed in grocery where you said there are the most ROI obstacles?
Yeah, good question. It was a couple of things. A, we raised money. We did a friends and family round. So I finally had a little, financial ammunition to go in there. Because at some point you're going to have to get some distribution, because not everybody shops on Amazon, and you want multiple points of distribution, online, offline, et cetera. So we picked the channels that we thought we'd do well. Drug's been real nice for us. Grocery we still stayed away from, only because it's not like, we did a deal with Rite Aid, and automatically overnight it puts us in 2,500 stores. That's great. But there isn't that grocery guy that can do that. I mean, Kroger's a couple thousand stores. That's fantastic. And then Whole Foods, we'd love to be in all the Whole Foods. We're not yet. We're still trying on that one, but it's a longer sales cycle. So what we did is we raised a little money. Our product offering was evolving, and so that it was sort of mass merchant friendly. And then we started calling on everybody, and you're going to get yeses and you're going to get nos. And then when we got the yeses, we evaluated and said, can I make money here? Or if I can't make money, is it worth it to the brand? Is it worth it to be in retailer X? I'll lose money, but it's pretty close. You know what I mean? Or am I going to spend money here and I'm just going to get blown out of the water? And my answer is always no on that one. It just doesn't make sense. So we picked retailers where we think there is a path to profitability, either from day one or maybe year 2 or 3, right? And then we just went for it. And I still like the alternative channels, the TJ Maxx's and the Marshalls. I love those guys. They're just nice people to work with. And so, for lack of a better word, I try to work with nice people.
A quick follow-up question before Sri jumps in. You mentioned 1P data and the access. Have you been using that 1P data to fuel your sales story into physical retail? And if so, has it been productive?
Yeah, you can. I mean, there's some cool stuff you can do with Facebook where you can take your first party data. You can find you create lookalike audiences on Facebook and try to match them up. We know who our customer is online. We skew a little bit female, we skew a little bit younger, we skew people who healthy lifestyle. So we're building audiences. For example, when we're building a Facebook audience to drive Australians into Costco's in Australia, we're using the same lookalike audiences on Facebook that we use here in the States. 60-40 female, 21 to 49, middle to upper income, health as a lifestyle, et cetera, all that kind of stuff that you guys know how to do. That's what we do worldwide because it seems to be the same audience. Email marketing is, I think, the most underrated marketing in the world. You saw our email probably yesterday. I love it. Like, we kill it. When we do an email blast, I mean, it doesn't cost anything because we're using, MailChimp or whatever. So it's straight profit. We love it, and we'd love to use it more. And then LinkedIn is the greatest PR firm in the world. It's incredible. I got an email today, which this happens never, from a retailer, and a good retailer, and the impulse buyer who said, "Hey, I saw your JiMMYBAR that's super on trend. Send me samples. We're very interested." That never happens. Yeah, absolutely. LinkedIn, Facebook, Instagram for the influencers, YouTube. We're starting to do videos now. You have to use. I was listening to, I forget what, it was a bar company, but I forget who it was. One of the ones that I sold. And they said they use 20 channels, 20 channels that are in their mix of how they promote their product.
Jim, I don't think those things are negotiable in 2020, like the channels are communicating with the consumer. But speaking about the go-to-market for channels of selling to the consumer, I feel in just talking to you, I sense that, you hustle a lot by going and meeting with retailers, et cetera, and physically being present when starting up new businesses, other than obviously the Amazon one is self-supported, sitting on a computer at home. But in this sort of a ecosystem where travel doesn't exist or is significantly constrained because of the pandemic, has there been any impact on the overall business in terms of going and selling? I'm pretty sure there is in terms of food service and from a final outcome from a consumer perspective. But my question is more around the ability to go distribute versus the ability to sell.
Yeah, good question. So my food service business is down 100%. I mean, if it could be down more than 100%, it would be. I mean, food service is just kaput, which sucks because it's a good channel. College and, I love hotels and the corporate pantry. It's just not happening right now. So you got to be really scrappy. So we're doing subscription boxes. We're pushing harder on Amazon. We're pushing hard on alternative. I'll tell you what else we're doing. International. International has been like a real bright spot for us, where we're getting into these places internationally that we didn't really think about. I'm talking to some retailers in Asia right now that have reached out to us. So we've been very scrappy on that one because you can't meet with people. There's also a lot of virtual meetings that are happening. So we've been doing the speed dating with ECRM, which I love. I love that. So anybody who will talk to me, I'll talk to. But the brand, bars is down 50, 60, 70% as a category. We're up this year. We're going to finish up. We're going to finish profitable. So we're having a great year. And I was talking to my wife, who's AKA one of my salespeople, and she's like, you know what? She's like, COVID in a weird way has made us a better business. And she's right. It has made us a better business. We're lucky that my sister owns a co-packer, so we've got that family relationship. It's made them a better business. They're very lean and mean. We did SKU rationalization. I got rid of 20 SKUs. A lot of the SKUs that you see on the website, they're going to be no more soon. We pushed the stuff that works. Keto's killing it. Wake and Focus, Immune. We're innovating fast. So it's forced us to be a better business. It's forced us to trim a lot of fat. My payroll is down 50%. We'll finish net positive cash flow wise. We're a better business than we were before. It's been a hard year. It's been a really weird year. I miss being on the road, because I was on the road 3 weeks out of the month probably. But it forces you to be a better business. And if you look, I was doing some research. The Depression spawned a lot of really good companies. And the recession of 2008 spawned a lot of really good companies. And so I think better companies are going to survive.
As you mentioned earlier, as you started to scale this business out, you shied away from venture capital or other types of institutional investments, and you decided to seek funding from people that you were close to, friends and family, as it's common called. Walk us through that and why you think that's been successful for you.
Well, I'll walk you through it, but I'll preface it saying I don't know if that's the smartest route.
Okay.
It was the best. I started the business in my late 40s, and this was my sixth, right? So I had been through the venture capital thing. I've also started companies and that I've sold that I self-funded. So there's no magic bullet, but anytime I talk to an investor, and I talk to them when they come into my sister's co-packer and they're like, I've got this great idea for this bar. I said, do you have money? Well, no. Well, I'm like, you got to get money because I don't want to see anybody lose money. You have to have access. Do you have a rich uncle? Do you have, a friend who's a venture capital? You got to have access to capital or it's just not going to work. I mean, growth is a cash pig, as I said before. You got to have access to capital. So what I did was I used my own. Then I went to friends and family, and I'm very lucky that I've got friends who are also entrepreneurs who have done well. And so we did it that route. But I'm not saying that the best route because comes with a lot of pain. First of all, it's the first time I've ever taken friends' money. I'm a warrior to begin with. I don't want to lose anybody's money. I'd rather jump off a building. I mean, I don't want to lose anybody's money. So that comes with its own pain. If you go with the VC route, and if they're a good VC, it's a great relationship because you have access to capital and they're pulling for you. They want you to have an exit. If you go with a VC who's not great, that comes with its own set of problems too. I've been through that one too. So I'm not saying that my route was the best. It just made sense for me at my, at the age I was at. If I was 25, I probably would have gone out and raised $5 million, and maybe I would have sold the business, for $60 million and be the next exit, or maybe I would have blown through it, and I'd be working at Olive Garden or something and bussing tables. I don't know, but for me right now, it was the right way, and there might be I might be raising money from VCs in the future to get to the next level, but because this business is so cash sensitive. What I wanted to do was flip it on a little bit and say, let's be cash flow positive. Let's do something crazy. And I don't have to be in 20,000 stores. I don't have to be in every Whole Foods Sprouts in America. I'd like to be. It would be awesome. But can I afford to be? That's the question. And every time I see someone on Shark Tank and they say, I got every Bed Bath & Beyond with my, soap product. I'm like, you have no idea if that's going to it's expensive. It's weird to like, when I was in technology, if you book $1 million deal for $1 million, if your partner's, in our business, we know that it costs money, and that doesn't even take into consideration, all the money you got to spend in marketing. So I think to answer your question, Peter, I don't know if it's the smarter route. I look at some of the exits. I mean, what have there been 5 or 6 major exits in bars? Every one of them took money in. One of them had some family money, but every one of them went out and raised money. It clearly worked for them. So sometimes I feel like a kind of a dummy. I'm like, God, I wish I would have raised $10 million when I had people calling me 14 times.
So Jim, one of the things that comes to my head is, we've already talked innovation, how you did go to market, your assortment rationalization. So we got into the meat of this business and how running a fast moving ingestible food product built for health and wellness also requires a significant amount of investments to succeed and scale. And you earlier did say, which I subscribe to the theory, you don't have to be everywhere. And sometimes the deals you don't take are probably the best deals you ever made. Keeping all that in mind, if I asked you, for budding entrepreneurs out there, irrespective of age, 25, 45, I haven't started this journey exactly yet. I've spent 25 years in corporate America, so I can probably date myself in a few seconds over here, and then I decided to go start a brand. What's your advice for budding entrepreneurs in 2020, given there are changes in the ecosystem of retail? One retailer is hogging most of the attention, and D2C will never fail you.
I would say if I was, you're different because you have 25 years of experience and you know what you're doing. But if I would say someone that is new to CPG, I'd say start direct to consumer. Start to direct to consumer the first couple of years. Figure out who you even are. You might not even, we've had 2 big pivots, in our first 6.5 years of business. Go direct to consumer and figure out do people like your product? Do they not like does your packaging look good? Have that one-on-one relationship. There are some great retailers out there, but I would say go to direct to consumer first, learn who you are, and then go to retail. Because you don't want to make a big mistake. You don't want to go into Walmart nationally with a product that stinks, with packaging that nobody likes. You're going to get killed.
Well, let me remind our audience that to find all of our content, podcast audio on 15 platforms, our YouTube channel, the list of our favorite podcasts, the companion materials to our profitability series, just go visit cpgguys.com. Or if you're walking around the house and you want to be entertained and educated at the same time, well, you can do that through your virtual assistant. Just make sure to say, hey, ask Alexa to play the CPG Guys podcast. I knew I set off probably about 20 or 30 just by doing that and people listening in their house. In any event, I apologize if I just triggered your Alexa. But in any event, just go to cpgguys.com. That's where you can get all this content. Jim, thank you so much for coming and sharing your story with us today. Very interesting, very different. We really love to feature founders on this business, entrepreneurs who are getting into this space. So you've given us a different angle that I know our audience is really going to like. Please tell people how they can learn more about Jimmy Bar and you in particular.
So JiMMYBAR's.com. Buy as much as you can and eat it and you'll love it. But as far as anybody wants to communicate with me, just shoot me a LinkedIn. I would love to chat with anybody, retailers, budding entrepreneurs, et cetera, et cetera. CPG can be extremely fun. There is something about, when you grow and you get into retailers and you're growing on Amazon, it's just fun. It's really fun.
Later today, if you see an order come through from the west side of Manhattan, I wonder who that could be. On 10th Ave, I won't give it away more than that.
Okay.
In any event,
we don't want people hunting you.
This was terrific. Shri, thanks again. This was really interesting because I think you brought a lot of perspective to what Jim is doing. Thank you for helping me formulate the questions, and I thought this was a successful episode.
A pleasure as always, and thank you so much
guys.
for coming on the show, sharing your wisdom as well as your entrepreneurial journey, not just Jimmy Bar's, but how your previous entrepreneurial journeys shaped what you do in FMCG, which is such a radically different category compared to all the other things you've done. So I also want to thank you in particular for the radical transparency. That is pretty cool.
Yeah, right on. Thank you, guys. Good luck with your venture. Peter, you're great as usual. Thank you so much. I've really enjoyed being here. Take care. Be safe.
Yeah.
Thank you.
And to everyone on our audience, we look forward to you joining us on the next episode of the CPG Guys podcast. Take care. The content in this podcast episode is provided for general informational purposes only. By listening to our episode, you understand that no information contained in this episode should be construed as advice from CPG Guys LLC or the individual author, hosts, or guests, nor is it intended to be a substitute for research on any subject matter. Reference to any specific product or entity does not constitute an endorsement or recommendation by CPG Guys LLC. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. The views expressed by CPG Guys LLC do not represent the views of their employers or the entity they represent. CPG Guys LLC expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, or inability to use this podcast or the information we present in this podcast.